Hey everyone, Anthony Venuto here with InTouch Mortgage Solutions. Hope everyone's having a great day. Today we're going to talk about the difference between a pre-qualification and a pre-approval and why a pre-approval is important to have.
InTouch Mortgage Solutions. Financing simplified.
If you're looking to enter into the housing market and you're looking to get your financing in order, generally it's advisable to start with a pre-qualification. Pre-qualification is exactly what the term means, pre-qualified. So what you're doing is you're either going to the website or the online app to get an idea of where to start. It's a good baseline to understand, your finances. You're inputting the information that the system will ask, like for example, income, down payment, credit score, if you know it, and regarding, what types of debts that you may have or be carrying, like car payments or credit cards. And it spits out a number to gives you an idea of where to start. Now, there are some flaws with pre-qualification as the fact that it's input driven. And as a mortgage professional, income can be either very straightforward or a little bit more complex. So this is why a pre-approval done by a professional, whether it be your mortgage broker or your lender, is important to go over. So a pre-approval will start with generally your income documentation, whether that be a job letter, 2 pay stubs, T4s, notice of assessments, T1 generals, depending if you're salaried or self-employed. So these things are important to have because it will help dictate what type of income can be used and what the bank will accept, right? So let's say, for example, you're self-employed, you show X amount of money or that's how much money you make, but the banks are going to look at a 2-year average. They may look at things a little bit differently. So it's important to have that professional review on your side to help make sure that you're qualified properly. And it also goes for if you're hourly, right? So if you're hourly and you're guaranteed hours, or if you're hourly with overtime, with commission, right? These are things that a broker or your bank needs to look at to make sure that we're using the right income. It can make the difference between qualifying for less or qualifying for more. And that's where pre-approval comes into play. So the other thing that a pre-approval does is we'll review the credit information. So that is an integral part of the pre-approval, because if you're doing it well in advance, the advantage you're going to have is that if there's any concerns that are in your credit reporting that maybe you didn't catch or maybe you didn't know were there, you can isolate them with some time to spare, right? So that's important to understand. It's also assessing your down payment, going through the information. So let's say you have 5, 10, 15% down, right? Or you have 20% or more down. Understanding where that down payment is, how long it's been in those accounts. These are the questions that the banks are going to ask. And if you're not careful with making sure that all that information clicks together, depending on the closing dates and so on and so forth, there could be a lot of issues that can come to light after you've put the offer in, after it's accepted, and after you're firm. So pre-approval, speaking to a mortgage professional, will help isolate any questions or concerns ahead of time. The other advantage you have with the pre-approval is once you've dissected all the income, the credit, and the down payment, and we're able to get you that amount that you can start at, your baseline, and you know exactly where you should be looking, you're saving yourself a lot of headaches. Sometimes we have clients that come to us and say, hey, we pre-qualified for this, we were looking at houses, but then all of a sudden we did the pre-approval. Now we've purchased, and all of a sudden we're at a different price point. So why does that happen? How to avoid that? The best way to avoid it is to get the pre-approval, so that the time and energy that you spend looking through MLS listings that your realtor may have sent you, or if you're online, is that you're looking at homes in your price point, especially entering into the spring market. Every day that you're looking potentially at the wrong house, you're losing out on the houses that you could have been looking at or should have been looking at. So the other advantage that you have with the pre-approval is the rate hold and guarantee for 120 to 130 days. Your lender, your broker should be issuing you a certificate or letter to confirm that you have been pre-approved for X amount, and that you can provide that to your realtor so that you can go out and shop with more confidence. Nothing's worse than going out to purchase a home or look for a home and not be pre-qualified and have to run into issues and lose offers and issue money for drafts and so on and so forth. It's really complicated. You don't want to be stuck in a really bad situation when it comes to putting in an offer. As I said, you're wasting your time and you're wasting the opportunity that you could be using to actually go get homes that you qualify for. And it's happened where, you do the pre-qualification and you didn't realize that you could have used more income because there was certain things that, the broker may have found and say, hey, you know what, you if you want, you can extend your income qualification to this amount rather than what you thought you could qualify for. It's important to really, as I said, work with a professional who knows what they're doing. So if you found this video helpful and you have any questions regarding a pre-approval, feel free to reach out to our team at InTouch Mortgage Solutions. We're always here to help, and we want to make sure that your home buying experience is the best possible. Thanks, and have a great day.